It's been a crazy year in finance, with boardroom dramas, bidding wars, and market turmoil, making it a year for the books. In this video, I wanted to highlight some of this year's biggest Canadian financial stories with a few global stories mixed in there as well. I'm focusing on the stories that had staying power and had people talking for weeks on end, not just a flash in the pan here. So at that, let's dive into the top 10 stories in finance in 2021. At number 10, we have the bridging finance scandal. It started off back in May when the Ontario Securities Commission investigated officers and shareholders at the Canadian lender for misappropriation of funds. PricewaterhouseCoopers was appointed to take control of the company in the meantime. The company is run by husband and wife team David and Natasha Sharp. One of the alleged conflicts was that CEO David Sharp received $19.5 million in undisclosed payments to his personal account. This account had been controlled by entrepreneur Sean McCoshen, who had been lent over $100 million from Bridging's funds at the time. There were other accusations of mismanaged funds, with one account alleging that $100,000 went to a car leasing company. One OSC forensic accountant believes that the funds were spent on a 2018 Bentley Bentayga for Sharp's personal use. This was followed by other allegations before the court of breaching securities laws and regulations, as well as misleading investors. David and Natasha Sharp were promptly fired from their executive roles. By July, Bridging Finance had been attracting attention from a broad range of potential bidders for the company's assets. This is a story that hit many Canadians right in the pocketbooks. Inflation had been a consistent concern this year, but it also reached its highest point since February 2003. In October, the Consumer Price Index rose by 4.7% on a year-over-year basis. November data matched these readings, which was reported last week by Stats Canada. Inflation is part of the sticker shock that Canadians see when they go to the grocery store, seeing food inflation grow by 3.8% in the October reading. According to Canada's Food Price Report, lab researchers are now anticipating a growth of 5 to 7% in food prices heading into next year. A family of four could pay just under $14,800 for food, which is a yearly increase of $1,000 from 2021. Earlier this month, the Bank of Canada renewed its mandate to target a 2% inflation reading amid rising costs and the threat of the Omicron COVID-19 variant. The bank has a range of 1 to 3% inflation, though the readings at the end of the year have considerably exceeded that range. Speaking of the Bank of Canada, the Bank of Canada had a big year in 2020 with the onset of the COVID-19 pandemic, and 2021 was no different. Headed by Bank of Canada Governor Tiff Macklem, there was a speculative will they, won't they story surrounding monetary policy, which had people wondering whether or not the bank would actually hike interest rates from its effective lower bound. Last year, the overnight rate was slashed to 0.25% to keep the borrowing environment accommodative, and launched a bond purchasing program in the bank's first foray into quantitative easing. While the bank never moved on interest rates, it did announce by late October that it would be ending its bond buying program and would move up its timeline for a rate hike. Economists are now expecting the earliest rate hike to come around April of next year. Canadian Pacific Railway and Canadian National Railway, two Canadian transport juggernauts, kicked off a feud that started back in March when CP Rail offered a $25 billion bid to acquire Kansas City Southern. The acquisition would give CP Rail an expanded railway infrastructure leading all the way down to the Gulf of Mexico. Its rival, CN Rail, then pounced on the opportunity to offer a $30 billion bid for KCS, triggering a bidding war in one of the industry's biggest deals. The stakes were pretty high given that the company failing to secure KCS would be at a competitive disadvantage. Regulators granted CP exemption from tougher merger rules set in 2001 and found that the merger between CP Rail and KCS would result in the fewest overlapping routes. CP still had to pass the competition review for the Surface Transportation Board, but it was largely spared the rigmarole of having to gain approval for the majority shareholder review. After a tug-of-war between the companies, Kansas City agreed to the $30 billion CN deal and scrapped the CP deal after it declined to boost its offer. CP appealed to Kansas City shareholders, urging them to reject the CN Rail deal, citing regulatory concerns, and even sweetened their own deal by bumping it up to $27 billion. KCS mulled over the CP Rail deal, particularly after a recent regulatory ruling from the STB threatened to put the CN Rail deal in jeopardy. By mid-September, Kansas City Southern finally accepted the competing CP Rail bid, and just backed out of the CN Rail deal altogether. In the following month, CN Rail CEO JJ Rouet announced that he would be retiring in January 2022, citing that his reasons were completely unrelated to the failed KCS deal. In late 2020, a new term popped up on the financial news radar: non-fungible tokens, or NFTs. These NFTs, which are unique digital assets that can't be traded or exchanged with something of equal value, took off in business news headlines throughout the year with reports of outsized valuations. One of these head-turning deals was the collage called Every Days, the First 5,000 Days by Beeple, which sold for a eye-popping $69 million US at a Christie's auction. An NFT marketplace called OpenSea became the largest trading platform dealing with these assets after it crossed the threshold of $1 million in monthly transactions. The success of NFTs came as the overall cryptocurrency market was seeing record price rallies and more innovations across the blockchain space. Back in March, the global supply chain was further strained after a cargo ship called the Ever Given got lodged in the Suez Canal after it was hit with high winds. The ordeal caused a traffic jam of over 200 ships and raised concerns of higher inflation in energy and food products as ships were forced to divert. The ship remained in place for 6 days before salvage crews were eventually able to free it. While the Ever Given paused supply chain routes, it did give us a very consistent supply of Ever Given memes. It only takes an army to pump up stocks and erase billions of dollars in short seller wealth through a series of short squeezes. That's what happened when Reddit retail investors from the Wall Street Bets community gathered together to bump up meme stocks like GameStop, AMC, and BlackBerry, among others, which were effectively struggling at the time. It began in late January when GameStop, a struggling brick-and-mortar video game retailer, suddenly saw its stocks surge to $483 in the last week of January after starting the year at only $18.84. Other stocks and even some commodities seemed to rally as well as these Reddit traders got together with seemingly no method to the madness. Other stocks and even some commodities also saw similar rallies as these Reddit retail investors got together to pump them up. The whole narrative raised questions surrounding market manipulation, regulation, and democratizing finances. One meme-style day trader called Roaring Kitty, real name Patrick Gill, became sort of an unsung hero in this whole movement. He took to Washington to testify after he was hit with a lawsuit alleging that he intentionally misrepresented himself as an amateur investor to rally together a trading army. It was a story that was difficult to explain in the financial news cycle, but this whole story of retail investors from Reddit flipping Wall Street's world upside down was way too big to ignore. The story surrounding Huawei CFO Meng Wanzhou's extradition case finally came to a close this year as the US Department of Justice reached a deal to resolve the case against her. As part of the deal, she was permitted to return to China. This was the end to a saga that started back in 2018 when Wanzhou was arrested in a Vancouver airport on a US provisional extradition request. China retaliated by detaining 2 Canadian nationals, Michael Spavor and Michael Kovrig, on espionage charges. They stayed in captivity for over 1,000 days until this recent deal was struck. The 2 Michaels, as they were called, finally returned to Canadian soil in late September. However, the entire ordeal has left deeper rifts in China's relations with the rest of the world. This was a family feud reminiscent of the HBO series Succession. It all started when Rogers Communications CEO Joe Natale struck a $16 billion agreement back in March to take over the rival Shaw Communications. By fall, Edward Rogers, chairman of the board and the family trust controlling the company, sought to oust Natale and replace him with his own pick, Tony Staffieri. One detail you might remember was that Natalie was reportedly tipped off to this whole plan via a butt dial. The ensuing drama pitted Edward against his sisters Martha and Melinda and his mother Loretta as he attempted to legitimize his board before British Columbia's top court. The court ended up siding with Edward, putting his hand-picked board in place, which includes his pick for CEO, Staffieri. The story doesn't quite end there now that Rogers is moving forward on its Shaw Communications deal. This month, Melinda Rogers said that she was looking to make peace with her brother and bring back stability to the family company. The overarching story in 2021 that all financial journalists had on their radar was the trajectory of the COVID-19 virus and how it would impact the markets, the economy, and our pocketbooks. The equity space and major indices like the S&P 500 and Dow Jones were able to maintain their growth throughout the year following their precipitous decline in March 2020. However, certain sectors like the energy space were struck by the Delta variant as the demand for energy suddenly plummeted. COVID-19 also struck the Canadian economy full force, a trend that has largely reversed over the course of 2021, though the economic recovery has been uneven, seeing sectors like the food service industry, for example, not quite meet its pre-pandemic levels. As well, small and medium-sized businesses still struggle to get by and address their labor shortages. Continuing concerns surrounding the Omicron variant has the year closing out in a similar way it began. Disappointment and uncertainty. But it might also even hold just a glimmer of hope that in the next year, maybe we'll get on the better end of this thing. Thank you so much for watching this video and others like it. It really means a lot. I cannot emphasize that enough. And if you've been following my reporting at all at Financial Post or any of the other outlets I've been working at over the years, I really appreciate that too. My own year in review has also been kind of hectic. I moved out of the world of freelance journalism and got a full-time job at Financial Post, and I'm very, very, very lucky to be working with such a great team and working on stories that I'm really passionate about. And I'm really looking forward to the year 2022, even though we're kind of ending on a dour note this year. Just excited to see what lies ahead and where my reporting takes me next. It's going to be great. It's been a tough year for so many people, and it's certainly brought a giant share of challenges to everyone I speak to and everyone I work with and everyone in my family and friends and whatnot. But I'm really deeply encouraged to hear about these stories of people overcoming these challenges. So I want to take this moment to say thanks again, and I hope you have a great holiday season and a happy new year. Here's to 2022. This is Stephanie Hughes signing off on 2021.